Money day, guys and girls. Welcome back to another episode. You're here learning with Vel, and of course, if you guys are new to the channel, I want to tell you guys this is the only place you need to be when it comes to financial news and also education. So, of course, as always, I want to share with you guys a lot of information that can help you make better decisions, because I feel like financial literacy is a term that is, loosely thrown around in today's day and age, but no one really knows how to make better financial decisions, because everyone is taught the word, but no one's taught the actual meaning. So I want to share relevant pieces of information that can help you guys make better financial decisions. And of course, we are going to have a look at certain instruments on the financial markets so that we can have a look at how well or how bad they're doing, but how I can also help you guys have a better understanding on the decisions that you can make when you look at these assets. Okay, so as always, guys, make sure you like and subscribe. You know the vibes, it's lit side. I got a new setup, so let me know what you lot think of the backdrop. Of course, it took me quite a while. I'm still in the process of getting things done in here, so I know I go through a phase where I'm consistent and then I'm not, and then I am, then I'm not. But having my office completely set up is going to make me much more consistent. So I just needed to get to that space mentally where I could feel like I wanted to create content all the time, and we're getting there. We are getting there. So yeah, I've had to get myself the specs just so that I can. My eyes started straining me, man. They started straining me, so I'm not blind, but it does keep away the UV light. So with no further ado, I don't want to ramble on. I want to talk to you guys about what we saw take place last week. Okay, there was huge news about the stock market, the commodities sector, and the crypto sector. Okay, we had over $6.4 trillion wiped off of the markets. $6.4 trillion wiped off of the markets last week, like that. In a blink of an eye, it disappeared. Now, this has led to a lot of conversations about the Fed needing to cut rates, and looking at where the rates are going to be towards September and November. An emergency rate cut before the September meeting would be a strong signal that the Fed is prepared to restore confidence and counteract destabilizing forces. But at the end of the day, when we have a look at the markets, we have to understand that what we're seeing right now, guys, is just a reflection of what the market's meant to do. A lot of you who are new to trading may have never seen the markets decline like how they declined. What do I mean by that? Well, I've been involved in Bitcoin since, I can't even tell you the year because I'm not really that good with maths. I've been involved with Bitcoin over 8 years. Okay, when I first got involved in Bitcoin, it was around 500 euros. 500 euros a coin. Do the maths, guys. I'm not saying I've still got coins from then, because if I had, I wouldn't be on this video today, trust me. But what I'm saying to you guys is that I've seen the appreciation of this currency go up and down, but over a longer period of a 20-year period, 15-year period, guess where it is? It's higher than it's ever been before. So when we see assets depreciating, the doom and gloom that is spread from online sources like news agencies, that is to trigger you to selling your assets. Because just like with any investment vehicle out there, the basic economics of sales, okay, the basic economic of selling is to buy low and sell high, right? That is business. You buy a product low, you work the value up, and then you sell it at a higher price. So when we think about Bitcoin, for example, if we look at, if we go into the charts, so let's go into the charts now. We can see here with Bitcoin. Okay, we can see here. What do we see with Bitcoin? Well, what we see actually happening here is with Bitcoin, price came up, it came down. It came up, it came down. It went all the way up, came all the way down. It came all the way up again, came all the way down. It came up, it came down. It came all the way up, it came down. Now, this is a quarterly chart. Okay, so this is over a much more longer period of time. It's based off of every 3 months. But what we can see here is a psychology of the fact that price is just making higher highs and higher lows. Okay, when price is coming down, the banks are telling you, okay, to sell your assets. In actual fact, I'm gonna do you guys one better. Okay, because we are learning with Vel, I'm gonna make sure you guys are learning with Vel, literally. So I'm gonna do this: down, up, down, up, down, up, down, up. Okay. Then we're going to do another one. Up, down, up, down, up, down, up, down. For those who are my students, you guys probably would have seen this before. Let's make the colors clearly distinctive. Okay, cool. So we got a green and we got a red line. Now, the green line represents the retailers, the likes of you and I, okay? And the red line is going to represent the banks, the central banks and the institutions, okay? Now, what have I drawn? Well, this diagram represents the actual motion of what we see happening in the world of finance, more specifically in revolves to trading, okay? Now, this line here, this green line is pushing up. Now, what I'm showing you is this. When the green line goes up, that means retail traders are buying, okay? When we're buying, the institutions are actually selling, okay? And when they're buying, we're selling. And then when they decide to sell, guess what we're doing? We are buying, okay? And then when we, the retail traders, decide to sell, guess what the institutions are doing? They are buying, okay? They are always doing the opposite to us, always. Now, you might think to yourself, well, that's not true, because actually, although you're saying they're doing the opposite to us, I also end up trading in the same direction as them. And the answer to that question there, or the answer to what you would say, that is, of course, a possibility. Okay, because what happens is, and I'm going to show you guys in real terms, okay, what happens is, even though, okay, the market is coming down here, okay, when the market is coming down, of course, you could say, well, I follow the trend, Cavell. I sell when the market's coming down and I buy when the market's going up. But if we can actually compare that to the diagram that I just showed you, what I need you to understand is, when the market is coming down, the institutions are actually preparing to buy. They are preparing to buy, okay? So if you notice, whenever you see candles, right? I mean, we can see them all across here. We can see bearish candles followed by bullish candles, or bullish candles followed by bearish candles. Now, even though the institutions are pushing something down, they're pushing it down because that's what they want you to do. So I need you to understand this from a more intellectual perspective. They are running a massive IQ play on us. What do I mean by that? Well, they're trying to deceive us. When they push price down, they want you to sell the asset. When they push price up, they want you to buy the asset. But the trick is, when they're selling, inside of their selling orders, they're actually already preparing to buy. So you may notice, for example, like when price comes down like this significantly, you can clearly see that sellers have entered into the market, right? But when you start to get small bodied candles and a bit of consolidation, that doesn't actually represent sellers significantly selling more. In actual fact, what it represents is the contracts of the sales being reduced, which is the reason why price is now moving across sideways, which we would call consolidating or consolidation. So what's actually happening is, when we see a significant push down, that usually means that there is a significant increase of sellers coming into the market, okay? And when we see a significant increase of price pushing upwards, that means one of two things. One could mean that they've closed a huge amount of sales that they had on the table, which is the reason why price is rebounding upwards. But the second can also be that they're also adding a huge significant amount of buyers also. So for example, when we see price pushing up slowly, okay, that would just mean they're reducing their sales. But when we see price pushing up aggressively, the higher high, the higher low, aggressive pushes like what we're seeing here, that is them significantly adding more buyers than what there are sales on the table, okay? But of course, from a market perspective, you have to understand, these guys can leave millions, millions and millions. They can leave billions of dollars on the table. If you've ever had a look, if you've ever seen a picture of a MT4 screen that belongs to an institution, you will see these guys have trades that are in $50 million drawdown, $50 million profits. They will have one trade open where they're buying AUD USD, and they'll have another trade open where they're selling AUD JPY, for example. So they'll be backing the Aussie in one instance, but they'll be selling the Aussie in another. And they might be in profit on a gold trade with over 20 million lots, pardon me, and they still won't even close the trade. Why is that? The reason why, guys, is because when they're pushing price down, they need to leave money on the table to come back. The market makers always need to put money down in order for them to make more money. So even though they're pushing price down, when they push price down, they understand that when they push price back up, okay, when they push price back up, the money that they've left on the table down here, they can come back to mitigate out of that at a later date. It's not like us where we can't afford to leave, you know, a huge significant amount of our account balance just open in drawdown, because it could get even worse. Because these guys are the only ones that are dictating the flow of the market, they're never going to blow their account, because they're the ones moving the market. All they're doing is significantly buying something in bulk so that it gets your attention, like these candles over here. Because when it gets your attention and you see these huge bullish candles, what do you start doing? You start buying the asset, because you're taught that the trend is your friend. The trend is my friend. That is bullshit. That exact same analogy, that exact same theory that you've been taught is the reason why you will always come short when it comes to having a consistent reliable strategy. So just to kind of step away from Bitcoin and to go back into what I was saying to you guys with the drawing. Where is the drawing? Where did I draw that? Okay, over here. Okay. They are always doing the opposite to us. Okay. When we're buying the asset, they're selling it. Even though, and this is the most important part, okay? The reason why we would be buying the asset is because it's actually going up on the charts. On the charts, it's actually showing us that it's going up. So we're buying it. And the reason why we sell it is because on the charts, it's showing us that it's going down. So I've drawn this diagram based off of people following the trend. But behind the trend is that actually their ulterior motive, is their true intentions. Their true intentions is to actually go in the complete opposite direction. But the only time they can do that is when they have enough liquidity in a certain direction so that they can turn it on and go the opposite way. So when we understand this now, guys, we actually welcome pullbacks, because pullbacks are what's part of the actual game growing. In order for the game to grow, you need to reach checkpoints. And if you think about a pullback in terms of price coming down, price, if it's just parabolically shooting up one way, is not healthy. A rocket does not just fly all the way up and never stops. Eventually it comes, if it goes flying up, it will come crashing down. Okay, so naturally we need to see the markets reclining, stabilizing. We can't just see something forever continuously going higher and higher and higher. So when we get these pullbacks actually give us a chance. It's like going to the train station, missing your train, and then waiting for the next train and getting on it. That is exactly what happens here. When price pushes up to 75,000, makes an all-time record high, everything's all great and dandy, and then price comes back down to 60,000, that is just a pullback, which is now allowing you to get on the train to go to the next level. So we have to start thinking about these things from a maturer mindset, guys, because a lot of people in the crypto space, or a lot of you new traders, are, you know, probably looking at trading thinking, you know, this is something that I want to do, but I'm only going to give it 2 to 3 months to make me a significant amount of money. And if it doesn't, I'm going to give up and I'm going to do something else. That is not how you should be living your life when it comes to trading. When it comes to investing into crypto, none of these things should be done overnight. None of these things should be done over the space of 2 weeks, 3 months, 5 months, even 6 months. Guys, some of the best investments have taken over 15 years to mature. And by the look of this chart here, like I've shown you guys, back in 2015, well, that was just shy of 10 years. 9 years ago, price was down round about $500. $500 9 years ago, right? $431. 9 years later, price is at 73,000. Price has gone to 73,000. Let's call it 74,000 because it's 73,982. So price has gone from $500 to $74,000 a coin. If you had 100 coins, right, down here at $400, and it's now at $74,000 a coin, and you've got 100 of them, do the maths, guys. Do the maths. So you have to understand there's much more longevity in holding an asset for a longer period of time. I know times is hard, so you might be saying, well, Cavell, what can I invest into short term that can show me a return on a daily basis? Well, for that, ladies and gentlemen, I can only share with you results with my automated bot. That is the only short-term investment vehicle that I could put my stamp on and say, look, this works for me. It's also worked for my clients. And this is something that I take It's very seriously, guys, because you have to understand when it comes to purchasing a product that can make you money, you need to make sure that that product is verified. So what I want to give you guys a chance to do is to go into the Telegram in the description below, click on the bot Telegram channel, go inside both channels, have a look at testimonial videos from members who have purchased it so that you guys can make your own informed decision too. Because I'm not here to sell you guys a dream. I'm just here to give you guys a way out if you guys are looking for one. Now, moving swiftly, what I want to speak to you guys about is the US economy, where we're currently going, what's probably going to happen over the next few months. We saw this huge crash take place last week, and then the charts just really died out. Okay, now I know I'm showing you Bitcoin, but here's another nugget for you guys. Okay, Bitcoin is heavily linked. It can be heavily linked with the stock market, with the technology stock market, which is the NASDAQ, because Bitcoin now has, of course, its very own equity on the NASDAQ, which is the stock market. Okay, they've got this Bitcoin ETF. It's called iShares Bitcoin Trust. Of course, this is a true reflection on the strength and weakness of Bitcoin. Meaning, if this comes down, okay, Bitcoin is going to come down. If this goes up, Bitcoin is going to go up. Now, one of the beauties of looking at iShares, which is the ETF of Bitcoin, is that pre-market, before the market opens, you get to see if this ETF is up pre-market or if it's down. If the company is up pre-market, then that shows us, okay, once the market opens, Bitcoin is most likely going to push up and have some positive volume. If this is down pre-market, then it also tells you the reverse thing as well. So just a few gems to help you guys make better decisions and to help you guys also speed up your not necessarily speed up though, sorry. It's a good way for you guys to have a extra confirmation before making a decision, okay? Now, I want to look at the NASDAQ. The NASDAQ's had a 17.5% decline since its all-time high that it made just over a month ago. Now, we all know historically 20% is considered a crash, but again, we've already spoken about the fact that naturally we need things to pull back in order for us to be able to get to the next level. Personally, I don't see any confidence. I have never seen any confidence within the US sector to merit the stock market being so high. However, what I do know is that the stock market is a reflection of what is a quote unquote reflection of the US economy. So what the Federal Reserve will do is they will continue to pump money into these blue chip companies so that the perception of the economy is seen stable. Because if the perception of the economy is seen stable, investors will invest their money into the economy. They will invest into these companies. If the perception of the economy is seen unstable, then investors will pull out their money. Now, just last week alone, we had Warren Buffett. For those of you who know Warren Buffett, I want you to drop a W in the chat below. Okay, if you know who Warren Buffett is and you've got to this far in the video, let me know in the comment section. But Warren Buffett, he actually withdrew 50% of his holdings with Microsoft. That 50% of his holdings amassed to over 277 billion US dollars. Now, we all know having an asset is more important than having cash, especially as much as $277 billion. What is $277 billion going to do for you in cash? It's going to serve a much better purpose going into an asset. We all know how fragile the US dollar is. But what Warren Buffett understood is that actually it made much more sense for him to withdraw that amount of money than for him to even hold it in that company. So that kind of tells you that he knew what was coming before we saw what happened. This is a wake-up call for anyone who's been contemplating getting involved in trading or just getting involved in learning a bit more about financial wealth. The financial game is not about making a load of money and pretty much, bragging about it. The financial literacy game is just about being able to better equip yourself, to better equip those around you who you care about, and it just really helps you make better decisions on a day-to-day basis. When you understand the implications of exchange rates, you start to understand that you can get better value for money in different places. If you know that a country, for example, like Russia, their currency went to, pretty much next to nothing at one point, then just by having a trading mindset, you could understand that by physically purchasing Russian rubles, okay, or rubles. I hope I haven't mispronounced that. Let me know if I have. But by purchasing Russian rubles at an extremely low rate, it's just the same as purchasing Bitcoin at $400 and then Bitcoin going back up to, $70,000, for example. Small things like these, guys, can be big and can make big differences when it comes to you making an excess amount of money in terms of having another source of income. So I do urge you guys to strongly, reconsider speaking with someone who kind of showed you or shared with you information about anything financially based. Reconsider looking into how you guys can expand. And when I say reconsider, I just mean if this is a thought that you thought about in the past and you never really went through with it, I can tell you this: I live in Dubai. I'm from London. I've lived there for 2 years. Okay, never in my life 10-15 years ago did I think I'll be living in a foreign country doing what I want when I want. Do you understand, guys? Doing what I want when I want. So it's really important to understand that being free and being financially free, these things do not require you to have 6 or 7 figures in the bank. It just requires you to make enough money so that you can sort out yourself, your family, and do what you want when you want, guys. Live by your own means. There's a lot happening in the world, and without getting too deep into things, it's important for us to be able to make decisions that can help us for the better. So again, just looking at the NASDAQ here, we had a massive decline, and that decline was 17.5%. Naturally, guys, we had to see price push back up last week, but last week became really difficult on the charts. I'm not going to lie to you, because we had that major push down Monday and Sunday. There just wasn't really, the damage had already been done, and I couldn't really see any entries worth getting into. And sometimes that is the best. The best thing is not to take a trade. That is the best advice I could give you guys sometimes. So, today I just really wanted to cover what's happening in the markets, what has been happening. And also an article that I found here was, where was it? The stark warning from De Beer Group's Nigel Green comes after yesterday's global sell-off triggered by investor fears about a looming US recession, the Fed being behind the curve on rate cuts, and economic turbulence in Japan with a rising yen. Now, that's really important, because if you guys can remember, go back on my channel on a few videos ago, I spoke to you guys about the Japanese yen. I told you guys the Japanese yen was an underdog. This was going to be something that was going to pretty much be unleashed like a beast, okay? And whilst the Japanese yen was still declining further and further, we eventually started to see the strength come out of, quote unquote, nowhere. But for us, over 4 or 5 weeks ago, guys, over 2 months ago, we anticipated this strength happening. The reason why we anticipated this strength happening is because we read the news. We found out what was happening with their interest rates. We realized for the first time in over 3 decades, these guys went from having a negative interest rate to a positive one. So as much as that could seem as uncertain for most economies, in that economy, it's definitely a positive thing. So despite whatever the markets were showing us in that exact moment, we knew from a longer term perspective that was always going to be positive. And that's the reason why we started seeing the yen wake up. We started seeing the yen covering some serious grounds. And because of that, guys, I was able to send out a trade inside my community, my paid community and my free community, which is why you guys have to be inside my Telegram, okay? This trade, guys, was 1,600 pips. Now, you guys should know, getting 1,600 pips on an AUD JPY, on an Aussie pair, on any currency pair, especially a slow moving currency pair, that's impressive. That is impressive. So I want you guys to understand that the way how I'm trading and the way how I want you guys to trade is not getting in the market on a 3-minute time frame. It's understanding what's happening economically, understanding the fundamental aspects of what makes a country positive, what makes them negative, what is making these countries come out with good news. Or let me rephrase that. What can make a country have something positive to say? Well, what can make a country have something positive is when they do something positive. A lot of the time we think that we have to overcomplicate things. Bro, sis, if the Japanese yen increase their interest rate, I don't care what America's saying. America talk a lot of shit. that's going to be good for Japan. And that will also be good for a lot of investors. So we just think about the simplicity of what's actually happening, and then we have to wait for these things to take place. The biggest thing we have to do in this game is anticipate. And sometimes trying to anticipate something can burn your fingers. I've been burnt trying to anticipate a trade, which is the reason why I prefer to react. And of course, if you get involved in a trade at the right time, it's a game changer. So for anyone who's watched this video was really just a hands-on and a conversation just to help you guys be more in tune with the economical side of investing, of trading. I'm not a financial advisor. Any information I've given to you guys, of course, please do seek professional financial advice before making any decisions, because I do not want to be liable for anything that I've said to you guys, but I do want to share with you guys my thoughts, my opinions, and hopefully it's helped you guys as well too. So I'll be back as always with another video. If you've appreciated this one, I really would appreciate a like, maybe a subscribe if you feel the vibes. And I hope you guys, of course, stay safe and always remember that every day is money day. Peace.